You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, we've been huge commodity bulls for years now. Knew that the current inflationary spiral was going to come upon us sooner rather than later. Numbers, lie and liars. Statistics lie and liars use statistics, as the saying goes. But by any measure, inflation is alive and well and prospering. And Will Rogers, the famed showman, once said, invest in inflation. It's the only thing going up. Well, we got a way for you to invest in inflation, and that is through commodity prices. Person you're about to hear from, well, the name of the company is BlueLineFutures.com, and it's out of Chicago. So they've got their hand firmly on the pulse of the market. And Phil Streible is with us now. Phil, welcome. So you've been big on energy, commodities. The original markets in Chicago were designed to trade commodities, to hedge farmer risk, et cetera. They expanded way beyond that. How are you using them to make profits now?
Well, if you look at the two main sectors that are, the headline inflation and what the consumer feels is what we're most active in right now. It's the energy prices, gasoline, heating oil, natural gas and unleaded, and then also your agricultural commodities, which are traded at the Board of Trade. All you're seeing is your wheat, your soybean oil, your corn and soybean markets all going through the roof. Remember, food and energy is what specifically hits the consumer. It's the one that they feel the hardest when you start to hear and talk about inflation.
Sure. So what we're seeing here with this inflationary cycle that has kicked into high gear recently, particularly commodities, very hard hit. Energy, one that I've been watching for years, natural gas. A short while ago, it was trading, $2 per MCF or per million BTU. Now it's trading over $9. It's been booming. Assuming it's still got a ways to go, what is the best way to play nat gas?
Well, I can tell you that the last time that I saw it at this price level was when we were hit with several hurricanes in the Gulf of Mexico, and most of the natural gas drilling was offline. So this is a completely different dynamic from the last time we were at this price level. The way we trade the futures contracts, we use the options, also the mini futures on natural gas, where every $1 move is going to be $10,000 on the large one. On the small one, it's going to be $2,500. And just to give you where we're at today, the July natural gas contracts trading at $9.32. It's up 79.5 cents today. So that's $7,950.
That's a huge move for nat gas. My friend who's a trader said they called nat gas the widowmaker.
That's 100% accurate. I mean, it took down that option trading firm, optionsellers.com, a few years ago when it went parabolic, and it wasn't even under these conditions here. It's just that it's such a highly emotional, and you could take it back and you look at, natural gas prices. And really where they hit the consumer is in their heating. And I'm actually seeing small protests around municipalities and around energy companies where people are saying, hey, my natural gas bill has gone up, 100% over the course of a year. When will this stop? And, it's that consumer that might be able to rattle the cage and get, the administration doing something.
I wouldn't count on that because, like you said, the last time we had nat gas is this high, there was a hurricane. Well, our economy is right now getting hit relentlessly by Hurricane Joe, especially where it comes to energy. The thing is, and we've forgotten in this country, Phil, how to rely upon or believe in the markets to basically do the things that politicians either refuse to do, don't understand, need to be done, or basically just are scared of the results, these high prices are going to lead to massively increased production, aren't they?
Eventually, but I mean, you have to get the capital spending that's got to go into those energy companies. They just don't want to do it. Their hands are tied. They're worried that if they go and they start, going back into reviving wells and securing new permits and things like that, that they might be hit with some new green energy tax or something. So it seems like the producers, domestically, their hands are tied. We have been operating at a higher level since the pandemic lows, but we're just not going to see that energy independence that, we were talking about 3-4 years ago.
Well, the thing that will happen is the political pressure will become unbearable. And that is assuming that we still have elections, bona fide elections, and that's a story for another day. Political pressure will become unbearable. So the government might not go out of their way to encourage production, but they'll get out of the way to see that more is done. That's what I'm expecting, because these prices, what are your all-in costs of producing nat gas? At the most, couple bucks per MCF if they're fracked. The profit motive is just too strong here to resist. And we're seeing huge production increases out of Canada now, the oil sands, the tar sands. So I agree with you. It takes time, but eventually politics will yield to reality. And, the other thing people so don't get is the importance of natural gas to the economy is way more important than it was back in the 70s when we had the oil embargo, because nat gas being domestically produced, there was a big drive on to convert applications from oil to natural gas. And we see it, electricity. At the same time, we used to have these long-term energy contracts between utilities, pipelines, and producers that could be 10 and 20 years long that guaranteed the stability of the price. Those don't exist anymore. They're 3 to 5 years at most. There's going to be a quadruple whammy on these nat gas prices. When they get up to $15, the political pressure, I believe, will be irresistible, and the profit potential will be irresistible. And then you'll start to see massive exploration.
Well, I think that, when you go on the political side, what's interesting is that the politicians already feel the pressure. What they do is then they impact and they really hound the Federal Reserve to raise rates aggressively. And they think that will solve, ultimately, by raising rates, will solve the inflation problem. But the inflation problem can't be resolved by just raising rates. I mean, the food part of it, when you get to the farmers and you get to, livestock and things like that, it's a whole number of things that those crops could be impacted by weather-related issues or logistical supply chain issues, things like that. So, the Federal Reserve can't pump more oil. All they could do is just keep raising borrowing costs so much that they damage the consumer, and the consumer goes into a recessionary mode and they slow down on their spending. And that's how they can get prices down. It's that deterioration that the Federal Reserve is aiming for, that we believe that U.S. equities are still overvalued at this level and could come down quite a bit more.
Hey, and that's such a great point. The indirect application of interest rate controls really cannot solve this problem. And because all we can wind up with at that point is stagflation, where the economic growth dries up, but prices still go up. And that's like the 70s. There's no Paul Volcker on the horizon who has a clue how to settle it. Look, if you're looking for a solution, you got to understand the problem. These guys don't want to understand that they are the problem, and they need to be swept aside so that the market solutions can prevail.
Yeah, the growth from all the stimulus, all the COVID stimulus and the cutting rates and everything else, it reached its peak back in November. That's when the NASDAQ peaked. That's when Bitcoin peaked. And then you had a little bit of a lag where the Russell peaked on, January 3rd and also the S&P. Since then, economic growth has been declining, and it shows on month over month, quarter over quarter forward changes that we're looking at in our models here. So you're going to continue to see, as you see the CRB index ramp up to new highs, as wheat prices are up 5.5% today, and you've got, again, natural gas and crude oil right back near those highs. That's going to keep that stagflation picture alive for at least another month or two.
Yeah, or perhaps several years. That's what I'm saying. Once the inflation genie is out of the bottle, the toothpaste is out of the tube, you aren't getting it back in so quick, short of a massive economic meltdown that basically destroys all demand, right? And or something like what we went through with the pandemic, and even that, maybe there's another one on the horizon. But clearly, the Fed's cures are as bad or worse than the disease.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
That's a very accurate statement right there. I don't know how they can fix it. They believe that the only way that we see a recovery in like U.S. equities, where we're starting, like if you hear someone talk about, going back up to all contract highs, the only way that occurs is if you do see like oil prices and some of these meats and energies and supply chain issues start to get resolved, and the Fed can forward see that inflation will come down naturally over time. And what they'll do is they'll pivot to dovish, and they won't think that at least they'll take a pause, and they won't think that they will need to raise rates or have that hawkish policy. That's the case for it. But we just don't see, there are not things in motion that can help take down oil prices right now or energy prices. I was joking with people over the weekend saying that, hey, the next time you go to the gas station, watch, it'll be $3-4, but it's not going to be per gallon. They're going to reprice it for half gallons, and that'll be the way you kind of accept the prices.
Hey, and in out west in Washington State, I don't know if you caught that article, Phil. They're adding another digit to the price per gallon because they're expecting it to go over $10 a gallon. Look, maybe the whole green dream is wonderful and we're all going to be better off, but this is a case of let the market work, because right now, with the number of electric vehicles on the market and they're gaining popularity, maybe it's kind of like a stealth subsidy of EVs by forcing energy prices higher. A certain party in our government has said for the past 10 years, they wanted energy prices at $6 and $7 a gallon. They've got it now, and all of a sudden they have no clue how we got there or how to fix it.
If they can really spearhead it and get all the EV, where everybody's driving an EV vehicle, all of a sudden electrical utilities will no longer be defensive plays. They're going to be more consumer discretionary, because the demand for electricity will be so high, the supply will somehow, you get a grid that goes out or something like that. Your electric bill at your house is going to be how many thousands of dollars before you go, you know what? I'll go back and unplug that toaster or take out that iPhone charger. So, you got to be careful what you wish for, where you want everything EV. That might not be a good thing.
Hey, I've got an EV. I got it before, not for any of the reasons that would make me otherwise a good citizen, whatever that is. I just like it because it's a supercar and it's pretty fast and pretty economical in the world of supercars. And it's high tech. I just happen to be saving like $500 a month in gas now, but I know that electric rates are going up because primary generation of electric in the United States, it's coal-based, and then nat gas, and then nuke. And then you got hydro thrown in the mix, and renewables are really far behind. Whenever they quote the amount of electricity contributed by renewables, they always include hydroelectric power, which the green movement absolutely deplores. And there are some realistic objections to massive dams like you have out in China, the Three Gorges Dam. There's legitimate objections to that. But that's primarily most of our renewables. And then you got batteries, all these other issues. But the point is that EVs are not an escape because they come from the electricity. A lot of it comes from fossil fuels, nuclear power, not building enough nukes. The nukes that we do have are getting near the end of their useful life. So we're going to have electricity shortages on top of everything else, aren't we?
Yeah. And I can't see everybody completely adapting to, an EV vehicle. It just doesn't hit all, they're very expensive right now. I mean, automotives just in general are, quite expensive. But if all of a sudden you get gas phased out, are people going to be able to go out and afford a Tesla or things like that? And some of these newer companies are just a little bit too new to trust their technology. So I think maybe in the long run, but I just don't see it hitting everybody. I'm surely not going to buy an electric Harley Davidson. I got to hear that thing roar.
Yeah. That's funny. But hey, that's exactly why I did get it. So I don't have to listen to those engine noises. Eventually everyone has a motor. Nobody's going to hear any of that. You'll have to turn on the speakers and put the sound through like you can do with certain EVs. Hey, so getting back to what you do as far as playing futures and all that good stuff. How do we cash in on escalating commodities prices without getting slammed when you have these periodic pullbacks, which is going to happen, right?
Yeah. I mean, so you go into it depends on what segment it is right now. I'd say one of the most undervalued one, obviously silver. There's a lot of people that just believe in that. Once you do get some, you get a comeback in the economy, you get the industrial growth and things, you get supply chains figured out. Remember, silver has about a 55% industrial demand use. Also, a lot of it also is in, jewelry demand, things like that. So only a small segment of it, 25% is investment demand. So if you get, China coming back online, you get supply chain issues resolved. That could be one that, could easily go up several dollars. I think oil, it's every dip, and those dips are getting higher and higher before, you get that where it's in any kind of value zone. I mean, anything north of or south of 110 now seems like a good buy. I don't know if we'll get that anymore. You could start looking out at some of the grains and things like that. Putin was saying last week that he's trying to work and broker a deal with the EU and Ukraine to get, grain exported. And then next thing over the weekend, he blows up a massive grain silo. So, you got grain prices right back up. So those are ones you want to look at kind of any correction there.
Hey, well, so the question is, one other question. Copper had a major run. It's still trading 10, 15% under all-time highs. It's going to take another run at all-time highs shortly, isn't it?
It could. So copper, the takeaway on copper and on oil is that when you look at the pandemic lows, going back to March 2020, what was the commodity that hit the bottom? It was copper. And then it never turned back from there. It just kept going on that 45-degree angle. And you get gasoline after that went negative from, obviously zero demand at all. Gasoline is the best inflation hedge that's out there. Same thing with crude oil. Those two are the best. So, you got to more learn from where we've at and where we could go. And if we do see another pandemic strike, what commodities are the key ones to watch? I think copper with China coming out of those lockdowns, it could be another play where we do cycle back up. We've already seen a pretty move higher. And we do know that the supply demand structure, we will see demand continue to increase and the supply will most likely decrease because mining costs are quite high. They use a lot of, it's high labor, high gas prices, high insurance, and all those things are going up. So you might see some unprofitable mines shut in, causing some supply demand imbalance.
Yeah, I think that's a very likely scenario. And so commodities, I saw an interesting thing. It said for the past 40 years, the financial sector controlled commodities and commodity prices. For the next 40 years, the commodity sector will control the financial sector. Interesting concept. I'm not sure if I agree or not, but I found it interesting.
You get the higher commodity prices go, the more pain that it has on the consumer. And then that has that ripple effect where, like, what are your worst sectors right now? It's, consumer discretionary, retail, these are all the things where if people, you said you're saving $500 a month on gasoline prices, but that's not the case on all other people. And even if you're saving it there, I mean, your costs for going out to eat and just doing things in general. AT&T sent me a notice that said that they're moving my plan up. It costs $6 more a month. I mean, it's just everybody's going after something.
Hey, well, we can always rely upon the substitution effect, right? And that is the substitution effect is real simple. If you can't afford steak, or if you can't afford lobster, you get steak. If you can't afford steak, you get chicken. If you can't afford chicken, then you go out, you buy Spam, right?
There you go.
That's it. So in any event, hey, people I know are going to want to connect with you, Phil. And how do they reach you? Give us the website again, please.
Yeah, you can go to www.bluelinefutures.com. We actually write a free 2-week newsletter, and it covers all the macro markets, gold, silver, all these energies, and the developments are there. It's no obligations. You just put your information in when you get to the website. It's called the Morning Express. You'll get 2 weeks for free. If you enjoy it, reach back out to us.
All right. We appreciate you coming on, Phil. If you've got a question for Phil, shoot me an email, kl@kerrylutz.com. Don't forget, go over to the financialsurvivalnetwork.com, sign up for your free newsletter. You'll find a link to Phil's site right there. Just click through to it. Phil, been a real pleasure. We will definitely be having you back on the show soon.
Yeah, thanks for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.